And Ntombenhle, it looks really that those US home sales numbers sent the shivers through the markets last night. And of course, this is really just an indication of what happens when government incentives are taken back from investors.
Absolutely, Stephen. I think, those home sale numbers really showed the extent of the loss of momentum in the recovery in the United States, and is filtered through to the entire world, really. We saw Asia also responding to what has happened in the United States, and us this morning also very, very depressed trading this morning, and just a response to the very, very weak home sales numbers. As you mentioned earlier, 15-year low, which is not something that is a small issue. It's actually a very big deal.
Of course, we have more home data coming out this afternoon. We also have durable goods orders in the United States as well. Do you think that negative readings have already been priced into these markets? Do you think we could still fall further if we do get poor results there?
Yeah, I think negative readings are already priced in. There's no great expectations out of what's going to happen in the trading session when the United States open. But I think also, we've seen also dollar gains there that have happened because, there's perhaps expecting the United States government to introduce some more quantitative easing measures. And, I think, it's just really a flight to safety right now, and people not wanting to put anything on the table, just waiting to hold off until the economic data turns around. And I think it's going to be a long time coming, as we've been warned many times by the United States Fed, that it's going to take a longer time than anticipated for the change to come. So durable goods also expected to be slightly less than last time, but the home sales data is really not a good showing at all.
Well, we had some short-lived respite really from those IFO business sentiment numbers that came out of Germany this morning. We did see European shares briefly trading positive. Of course, we have the FTSE now down by 0.5%. But it really looks like Germany is standing alone in Europe. Last week it said its expected growth for this year to register 3%, which is pretty good for an economy of that size.
Yeah, I think Germany and France are maybe the better positioned in the Eurozone in totality. But, we saw the Euro's reaction also to Ireland's downgrade, sovereign debt downgrade also. And I think, it's a very difficult position that the stronger economies in the Eurozone find themselves in, because they are in the totality of the Eurozone. So their performance is really hampered by what happens outside of their individual countries such as Germany or France. So we're just seeing that effect that, there was a slight uptick. We saw it in the FTSE as well as the Euro, but it's come back down again.
And some results out this morning. BHP Billiton, of course, the world's biggest miner, so everybody watches them with much interest. I see the share price was down this morning. Did they miss the mark with those numbers? Because they look pretty good to me.
I'm sorry, can you repeat that?
Did BHP Billiton miss the mark with its results for the year? Because they looked pretty good on the face of it, and yet we saw those shares under pressure.
Yes, yeah, they were under pressure, but I think it's just general market conditions that really working against it. Because as much as they did miss analyst expectations, which was a very good showing from Billiton there. I mean, sturdy balance sheet. I think the market really liked what they saw. They really benefited from the higher iron ore prices and copper prices and the physical demand in copper. So it was a very good showing from that side, but just hampered really by by the general sell-off in the market.
Well, you mentioned the sturdy balance sheet, and of course they do have that hostile bid for potash at the moment. The market really wondering where that bid is going to go, whether BHP Billiton might increase its offer for potash. What's the view out there?
I think the general view is that they're still going on a roadshow to showcase their results and going on an intercontinental roadshow. But I think they need to abate the fears of shareholders that it is a risky offer. They haven't really played in the potash offering or commodity side of things, and the shareholders are really questioning whether it is a strategic fit. But the balance sheet just does show that it's the best position of all these competitors to take on potash and to try and get that stock. And they've reduced their net debts, and they are very well positioned to be a front runner in the final acquisition of potash.
Of course, another issue still hanging over BHP Billiton is, of course, the iron ore joint venture with Rio Tinto in Western Australia. And that seems to be dragging on a little bit.
It is dragging on a little bit. As you mentioned earlier, Billiton has been down about 6.9% since its hostile bid offer, and since more news came out about the Rio Tinto iron ore joint venture. But I think right now the consensus is that there will be synergies should it go ahead. But right now they need to actually overcome some regulatory hurdles that they seem to be facing. Whether they will be able to do it by the deadline at the end of the year is still something that we'll have to see play out. But I think those regulatory pressures are the ones actually subduing the share at the moment, and also what the main concern is about that joint venture.
Imperial Holdings up with numbers 40% growth in profits. Seems like it's done pretty good from that recovery we saw at the beginning of this year in particular, but I suppose a bit more cautious on the outlook because we don't know where that recovery is going from here.
Yeah, a nice showing there, 40% up, I think, in full year earnings per share. And that was mainly due to their cost cutting. I know that they got rid of about 40 dealerships, and also the lower interest rate environment in South Africa was a major boost to the vehicle sales side of the business. I mean, I think vehicle sales contributed about 59% to total sales, and that was just mainly due to the lower interest rates. We also saw that rental side of the business has been doing well, and that was probably in anticipation of the World Cup and during the World Cup, but also a very cautious outlook from their company, saying that admitting that economic factors going forward may hinder their performance a little bit, because as we know that the economic recovery has lost a bit of momentum. Some of their one-time events such as the World Cup have now gone. That was boosting some of their profits. So it will be an interesting read this time next year for Imperial.
Of course, like Billiton, also has a pretty strong balance sheet and also on the lookout for acquisitions in Ntombenhle.
Yes, yeah, I think they are looking at CIC Holdings, which is a warehousing and distribution to factories internationally and locally. So I think the market has received that very well. The stock was up ever so slightly, but yet again, because it's subdued trading today, it didn't really perform that great. But I think it is well positioned in balance sheet terms for it to really expand its diversified offerings.